Morning, traders. Good morning to everyone. It is Monday, August 5th, right? It was actually my birthday yesterday, so this is quite the birthday present from these markets getting absolutely destroyed. This is crazy, right? The S&P 500, the S&P 500 futures are down significantly off the start of the session. They gapped lower and they've just been trading lower and lower and lower all freaking morning here. Just constant sell side. They're down about, like, at the peak, about 4.25% realistically on this move, and quite the move that we've seen on these futures. So the Nasdaq is down even more, right? We've seen every market getting beat up here, and a lot of it coming from Asia itself, right? So we've seen that, what's it called? We've seen that the Japanese, the Nikkei, has been getting a huge beatdown. We've seen a lot of individual tech names getting a massive beatdown in prices right now, and you can see we've peaked at about nearly down 5.6% on the Nasdaq futures, catching a little bit of a rebound right now. So a lot of downside momentum is going on right now, and we've pretty much hit a lot of our targets here on the larger scale, the S&P, the Nasdaq, as we've started off the week on what seems like to be a terrifying note here. So as we're looking at these markets, right, we've seen a decent little rebound from these lows, something that we were looking for right now just a few minutes ago. But we thought that maybe last week was bad with multiple downside days. Now look at the start of this week. There's carnage everywhere. We can look at the Nikkei as well. The Nikkei is down. Bugs everywhere. The Nikkei is down on an individual basis over 8%, right? From the peak, actually, from the reopen of the session, we were down about almost 12.5%, right? Almost 13% or so. So investors can really use some soothing words from central bankers right now, especially from the Fed, that's being seen as falling behind the curve. Remember how things went in 2022. A disappointing jobs report on Friday indicated that Powell and company should have likely cut rates earlier. And the expected first rate cut is in September, which can bring in some very short-term love to the market, but medium to longer term, I don't think that that's going to be the case. So, sentiment has quickly shifted from a soft to hard landing, or even an emergency landing, right, based on what we're starting to see over the past few days here. Flashing red, Monday's bloodbath started with Japan, where the Nikkei dropped about 13%, as we saw here. Its worst session since the nuclear reactor in Fukushima had a meltdown in 2011, adding to the concerns where the BOJ steps towards policy normalization, and it has translated into Japan's world-beating rally this year, entering a bear market. Circuit breakers were also activated in South Korea's Kospi after the index rapidly dropped 8%, while Australia's ASX 200 slid nearly 4%, its worst session since June 2022. Major indices also tumbled in Europe, and over in the US, traders are also set to open the week by pressing the panic button. The S&P 500 futures are off more than 3%, as we just saw. They're pulling back a decent bit right now. They're seeing some kind of upside momentum here, right? As we look at this thing, like, we can just pull this across over here. But we've seen a decent little pull off to the upside in these equities. Nothing crazy, but a nice little pop from these lows so far. The Nasdaq is down. The Nasdaq futures, like we saw, they were down over 5.5%. The index already fell into correction territory last week over an overheated AI rally, and the headline making news from Warren Buffett has not necessarily helped the situation for tech stocks. Safe havens like gold and Bitcoin are also falling and failing to catch a bid on the sell the everything mentality that's taking hold, and no one appears to be willing to catch the knife just yet. There's not too much momentum that's coming. And one of the biggest things that was brought to my attention this morning when I was looking at these markets is the very thin book, right? Nasdaq is super illiquid right now. Like it seems fairly untradeable. The liquidity spans at like 5 points at a time on Nasdaq. I haven't even touched this. Don't even want to touch it. The S&P is fairly thin as well as volatility has increased. And one of the biggest things is that the VIX, right? If you take a look at the VIX, it seems a little outrageous that it's this high, but VIX tagging not only above 50 but above 65. This is one of the biggest VIX readings, the biggest one since we saw 2020, that COVID crash. And honestly, we weren't too far off from the peak of that COVID crash, right? VIX hitting 66. This is massive, right? Very big. And I think it's actually overdone in a sense, but we'll see how that transpires. So rising geopolitical tensions are also making investing landscapes pretty tough, right? With President Biden meeting with his national security team in the Situation Room ahead of the anticipated Iranian attack against Israel. It could also include a coordinated front with Hezbollah in Lebanon and or the Houthis in Yemen, and a serious escalation that could begin as soon as Monday, so today. So fears a regional conflict have prompted the U.S. to deploy additional military might in the Middle East, including a carrier strike group as well as a new squadron of fighter aircraft.